So let me start by asking you to please take a few seconds and think about everything you've used since you woke up this morning. Everything you've used since you woke up this morning. 80% of the technology that you've used since you woke up this morning was created in the last 40 years. In our 2 million years of history as humans, we've created 99% of the technology in the last 200 years. 20 years ago, the smartphones emerged and they changed everything. It's basically the digital economy that we talk about today. The digital economy is growing at 300% in the last 15 years, faster than the physical economy. And it created the modern life. If you think about some of the examples we heard today, you download an application on your smartphone and you have a job. A lot of people today that maybe with a bicycle or a motorcycle have employment. A lot of people today download an application and they can sell online. They don't need to move to the big city to establish a business. That's the modern life. We work, we consume, and we do business thanks to this smartphone that emerged 20 years ago. Only 3 years ago we got introduced to AI. 3 years ago we had our AI moments and we realized, wow, this is a tremendous technology that we can use to innovate, especially in the private sector. Now, what would the next 5 years be like? Can we imagine the future of work, the future of business, the future of banking, everything we do? What would that look like in this acceleration? Everything is very compressed in the timeline that I just talked about since the last 200 years. Now, institutions use technology to create value over time. Some of these institutions tend to stagnate in the moments of inflection points in technology. Others that listen to the signals of these inflection points tend to do much better. They tend to grow. They tend to create more value, which is economic growth and productivity. And these inflection points are hard to read. They're signals, but they're full of noise. Now, we cannot predict what's going to happen in the next 5 years, but as Steve Jobs says, and I like his quote, that we can only look in the past and try to make sense out of the future. So let's look in the past. We had many inflection points. The first inflection point, the signal, was the steam engine, and that created the assembly line. That was the inflection point and the signal that some institutions paid attention to and some just didn't. That inflection point, important inflection point. The second inflection point was related to transistors. The PC era, the computer era, the internet era, the precursor to that were the transistors. They led to a whole inflection point. Again, some institutions saw the signal, some didn't. And then we get the Netscape moment, which is like our ChatGPT moment, 1995 Netscape. It allowed us to see inside the internet and understand what is the potential. What can we do with the internet? A whole digital economy was born from that. And the precursor to that were the modems. Many of you remember the technology that we used to access the internet, were the modems, the bulletin boards. That was the inflection point, that was the precursor, that was the signal. Then we get our smartphone inflection point. We just talked about it 20 years ago. A whole digital economy is born, e-commerce, modern life, we can get jobs. Everything changed. The precursor to that, the inflection point, was Wi-Fi. You couldn't have what we have today through the digital economy without Wi-Fi. That was pre the inflection point of the smartphones. And of course we get ChatGPT 3. It just didn't happen. There were signals that brought the inflection point. It was machine learning. It was deep learning. It was transformers that brought us the GPTs. And of course, the retrieval augmented generation that now bringing us agentic AI. This is all part of an inflection point that now we're sitting in 2025 and look at each one of these inflection points, what happened, economic growth and productivity. Every single time we have an inflection point, something happened, we have economic growth and we have productivity. So let's talk about it. AI just didn't happen. Alan Turing started his paper 75 years ago. Alan Turing is the grandfather of computer science. And he kicked off the conversation about a very simple question. It was a whole paper, but a very simple question. Can machines think? Can machines replicate the human brain? That's what started the entire research of AI 75 years ago. So let's understand that. Why is AI different? Why every time we talk about AI now in 2025, it feels and seems that it's going to change everything in the next 5 years? Well, let's look at the human brain. The human brain has 86 billion neurons. We are all born with 86 billion neurons. No difference. If we take a sophisticated, standard, large language model, and we look at the deep learning or the neural network that is behind the deep learning of it, we're talking about 1,000 billion neurons. 86 billion neurons to 1,000 billion neurons, what does that mean? Let's put it in context. A traditional, smart, human-like LLM, large language model, or potentially a transformer that has a neural network with deep learning built in, can take 1 trillion words, and those 1 trillion words can be learned in 1 year by the AI brain versus 8,000 years by a human brain. Now, that sounds like quite radical and drastic, but let's put in context 1 trillion words. Because it's based on the data that these large language models and these AI systems use to train. By 2030, we will have 300 zettabytes on the planet worth of data. Now, I don't know about you, but 300 zettabytes is quite complex for me to understand. So I went and did a little research. What does 300 zettabyte mean? And if you take 300 zettabytes and you put it on 4K video, you will watch that video or you will stream it for 2.5 billion years. You take 300 zettabytes, you convert it to 4K video, high definition video, it will take 2.5 billion years to stream that video. But what is 1 trillion words in the context of 300 zettabytes? And the reason why it's important, because this is how smart these models are versus when they learn the entire data set that we will have on the planet Earth. I have this bottle of water that I used to drink, and I also did some research, and 1 trillion words that, again, some of this AI that we interact with, is equivalent to 1 liter of water of the entire ocean water. So if you take all the oceans in the planet, the most sophisticated model in AI today has only been trained on 1 liter of water, of the entire water that exists in the planet. That's how sophisticated these models are, and we think that they're extremely good. So just wait until they drink all the water of the planet. And when they have all that data, we will still be in what's called weak AI. Weak AI is where we stand today. It's not strong, it's called weak. Why? Because there is another era of AI, which is called the artificial general intelligence, and that's when AI will come up with its own data. It will not need training data from us. It will become physical, and it will go out to the world and actually train itself on its real experiences. So this is extremely powerful. If by now you have not knew, or you don't know yet, so I hope that that has been illustrative enough. So yes, AI will augment human dignity, for sure. AI will augment human dignity because it will inject intelligence in processes that are barriers to access today. The reasons why we have barriers to access in the planet is because the processes that we use to provide this access are extremely expensive, they're fragmented, requires manual interventions, and they're not connected. But AI will augment, will inject intelligence in these processes at the institution level, be it in the private or in the public sector, and will augment human dignity. Finally, I think that this is what's going to make a difference. But we have a problem. AI needs to take actions. For AI to augment human dignity, it needs to move to the physical world. It needs to use the infrastructure that we use today. And that's the internet. And if you don't know yet, the internet was never created to do business. I'm sorry to break that news today, but the internet was created to share information. The internet had nothing to do with business. The internet was created for us to send emails and search online. But we took the internet and we converted it to a network or an infrastructure to do business. So we have to add a lot of technology on the top of the internet to make it useful. And just think about what we do every day. The internet did not have identity, does not have an identity. There's no digital identity on the internet. We have to create it. Identity travels different than money, right? So you make a payment, but you have to bring identity and link them to validate the payment, because identity exists in one database and a payment in another database. The internet does not come with built-in interoperability. We all have to convert and match and confirm. It's a lot of money, a lot of inefficiency, a lot of cost, a lot of people involved. The internet does not have a form of money. Surprise! The internet does not have money built into it. Money travels separately in a physical form for settlement. Yeah, we have electronic money, and that's great. We have made a lot of advancements, but still, money is physical. We have a digital world and a physical form of money. So this is what it looks like to do business every day, between the private sector, the public sector, between all of us. This is what it looks like. We're just constantly moving information between databases that don't speak to each other. This internet is the internet of the post-World War II era. That's what we use in 2025. So we have a problem. What we need is an internet that gets rid of this problem that there is no identity, there is no form of money, we have no interoperability, and it needs to operate at the speed of the digital economy. Hence, we need blockchain. Blockchain is the technology that needs to meet with AI to finally create this opportunity to create a digital economy that's inclusive of all. You can't have a sophisticated brain of 1,000 billion neurons learning a trillion words in a year, making sense out of the words, connecting the words, and making decisions for you, and then say, okay, now that you have a great answer for me at 99% accuracy because you use enterprise data as your context, and it's curated, and I trust your answer, now go to the internet and execute. Of course not. What's the identity of the agent? Who's going to be the signer for the agents? The CFO of the company? Who's going to authorize that action? Are we going to have a document, the KYC for the AI agents? How is it going to work if we don't have a tokenized infrastructure by blockchain that allows for this kind of transactions to be executed? We trust, because that's what blockchain does, is trust. But I'm not talking about a blockchain, again, created by a private institution that's going to build a fort around it, a wall, and not allow anyone to access it because they're going to monetize it. This is where we need to come and think about an internet of value. We need to create a public infrastructure that delivers value, not information, because the internet delivers information. We need an internet of value. It's very different to move information versus moving value. Value needs to move with trust. And this is where we stand today in the next 5 years. We stand in front of a decision on how we're going to do that. Because look, the truth is, for the last 40 years, where 80% of everything we use was created, we have made some progress, but we still have not made a lot of progress. We still have an informal economy which is quite big. I mean, we're talking about 70% of employment is still in the informal economy for many countries around the world. We're not talking about developed markets, we're talking about emerging markets, Latin America, Africa, Southeast Asia. We're talking about 70% of the employment. Of course, some countries will vary, but this is on an average where we are. We're talking about $25 trillion sitting in an economy that does not find its way to bank accounts. It's almost a quarter of the world GDP. And we have made some progress, but it's not good enough, because at the end of the day, this economy driven by cash shouldn't be a privilege for anyone to have a bank account. Why do we treat having a bank account or access to financial services as a privilege? I mean, we're all very privileged in this room. We have a debit card, we have a checking account, we can buy something online, we can have it delivered to the house. But what about the rest of the world? that don't need to hide anything, they just need to have access. On an average, we're talking about only about 39, 40%. Again, we're gonna go from one country to another one, we're gonna travel, and the numbers may change slightly, but that's the reality. It shouldn't be a privilege. Access to education, healthcare, employment, financial services should be a universal right. But we need an infrastructure that allows us to do that. And so, the hidden cost of not doing this, besides 2% of the world GDP is used to print money, by the way. So 2% of the world GDP is used to mint money and manage the money, even maintain it and destroy it. Some countries bring their money on boats. During COVID, a lot of countries run out of cash because the boat got stuck. They couldn't get their money delivered from Germany or from some countries that printed their money here in Latin America and the Caribbean. And so there is a cost, but the real cost is the human cost, is the invisibility that a lot of people in our society are completely cut off. They're completely invisible, and dignity that comes with that. So it's not a question that we are at an inflection point with AI, which is going to inject intelligence into processes that are barriers to access, and blockchain that's going to tokenize value and upgrade this internet of the post-World War II era that is built on databases which leave a lot of people out unless you can monetize them. But I believe that when the private sector, especially with the fintechs and the big techs, and we heard the example today, who don't see billions of people in the planet not as a balance sheet, they see them as members of a platform. Banks have a role to play because they will bank the fintechs and the big techs. We will partner up, but we need a business model that sees billions of people around the world as members of a platform and not entries in a balance sheet. And that's the private side. And the public side needs to create a universal infrastructure. We need an infrastructure of value. We cannot let the private sector run an infrastructure of value unless it's regulated. If there are rules of the game for the private sector to come in and create consortiums and create an infrastructure of value, then that's okay. But we definitely need to work together because look, again, the question is, will AI and blockchain come together to create a digital inclusive economy for the benefit of humanity? And who's going to lead that is a question of the next 5 years and an inflection points that we should all take in consideration as we have these discussions and as we design our solutions moving forward. Thank you very much.